Yes, we are live. Good morning, everybody. Happy Thursday. Is it me or does it feel like Friday? Maybe it's the short week next week, but it feels like Friday to me. It is not, though. It is Thursday. Good morning. Welcome to Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick with you this morning. We got a lot going on. First off, the market is ripping. Pumping Powell living up to his nickname yesterday. So we got that. We do have GDP at 8:30. This will be the first revision of the Q1 reading. If you recall, the initial reading for Q1 GDP came in negative 1.4%. So at 8:30, we'll get our revision to that number. We'll have to be mindful of that. We got a lot of earnings going on today. Nvidia, a lot of software stocks, a lot of retail stocks, some Chinese stocks, a lot to get to. Mark Chaikin, Peter Tuckman, they are our guests. So let's go. Smash that like button. Good morning, everyone in the chat. I see you guys. Here we go. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Joining me now, Mr. Joel Elconin. Joel, good morning. How are we doing out there?
We're doing good. We got a little green on the screen here. Nvidia couldn't break the market. Let's just do a quick rundown. 22 handles at 98.75. That's right in the area of Monday's high. Folks, tell me what you see on the right chart here.
I don't see your charts.
You don't?
No.
How about my internet connection? Is it better today?
Yeah, it's better. And also, I just realized my mistake. I just realized I got the date wrong on today's show title. Apologies, everyone.
Yeah, John Fernandez pointed that out.
Yeah, appreciate
that.
Point
out all the stuff we do bad that never.
I appreciate the feedback. All good. All right, I got the charts up now. Top right chart. What do I see?
What do you see here? What do you see between in this area here in this real estate above 4,000? What do you see?
Nothing.
Exactly.
See a double top of 4,100, but that's a long way.
Yeah, and you know when that was? That was this was the Fed meeting day when everyone like buy, right? And then we double topped. And then you know what happened the next couple of days. So my fear was after I saw the bad BABA numbers that we were going to do the same thing, but we got retail to the rescue. So I'm going to have to do some work here to find something. I can make something up in the 40 and in this 4,000 handle. There's got to be a close or something. But I just want shorts to be aware of that. Gold down 220, 1850, 10. Not much going on there. Silver up a couple pennies, 21.90. Bitcoin just withering away from 30K down 640, 28,865. What's going to be the next catalyst for Bitcoin? Ethereum, that's down $140.50 at 1803. So we'll bring in Triple D. Triple D, did you get the hedges right? Did you come in position?
No, I don't know. It's a really tricky day. I'm trying, because it's been such a tricky market and so much rotation lately, I'm trying to do sector hedging more than anything. Not even SPY versus banks.
Can you explain that a little bit more?
Well, you're sticking in the same sector. So if you're long some banks, I'm trying to short an XLF or KRE or VFH or something against it. That is obviously banks as opposed to just jumping in and saying, okay, you can go banks versus SPY on your hedges. So and for everybody who's new to the show, I trade market neutral. What does that mean? It means I have equal longs and equal shorts for the most part, with a little bit of beta hedging in it, meaning if you got something that's a really wild child, you got to short a little bit more of the indexes to make up for that.
AMD, something like an AMD.
Yeah, but what that does is it smooths out your earnings curve. So basically, if the markets are, if you're long only, you're obviously making money when the market's going up and you're losing money when the market's going down. We trade market neutral, you're trying to eliminate that, volatility that, okay, the market tanks, I'm going to get killed. It's not the case. So then I'm just trying to extract the alpha. So what I'm trying to do is eliminate the market effects and just extract pure alpha from my strategies. So if I'm making a call on an individual stock, or I think something might be going up, or I'm trading, an individual piece of news, I don't want the market to impact that, and that's why I trade market neutral. So yes, I'm trying to even do the sector hedging right now, because when you get the VIX really high, you get the VIX kicking up, sometimes you can go and you can just go stock for stock. But right now, there's been so much value versus growth, rotation, some stocks leading, some stocks lagging. You kind of gotta try to hedge more within sectors now.
It just a quote, just a couple things of what Dennis says. Yeah, it eliminates, like, on these rip roaring up days, you're not gonna make as much, right? Because you have the hedges on.
Yeah.
Whether this is intraday or overnight. On the down days, you have a better chance of making money. You don't have to have a losing day. And then the other thing I just wanted to comment is we have Eric M, who it comes up pre-market prep with stock odds every day, and he was just like, he mentioned the other day, you were talking about growth, like you were really nervous about growth really getting a pop, and
Right.
so he hedged with something. I can't remember what the exact combination was. I think he had some stuff more with like a growth indicator. I think he maybe went with the idea IWM instead of the SPY, and it turned out that it didn't work that day. But that doesn't mean, it's just identifying the turn, where the better hedges are, where the sectors are. So that directly correlated to what you were saying. It was
And
just
people will be like that. I mean, it's the one thing, you're not going to make as much on the up days if you're trading market neutral, but you're not going to, and you can make money on the down days if you're trading market neutral. So, somebody might be like, I had a great day, market was up 2%, my stocks were up 4%. My portfolio might have a great day if it's up 0.5%. And you'd be like, wow, you really suck today. Well, no, because it's a different type of strategy, because when the market falls 2%, I might actually make 0.5%. So I'm still making money, maybe even when the market's going down. I like the consistency of it. If I analyze my long-term trading, I never have done that, but I feel like I'm fairly consistent, like 18 out of 20 days making money. And in some cases, it can even get more than that, which, people don't even believe sometimes when you say that. But there's lots of prop traders that trade market neutral that are very, very consistent. And I'm not talking about having big down days either. Okay, well, yeah, you make 18 out of 20, then you have a huge 2 down days. No, my down days are usually limited. I mean, sometimes you have some bad news and get caught in something. But overall, I've said this, in my prop account, I have made money every single month for 22 consecutive years. So it's working. And if you wanted to check that, you can check that. That's in my Bright Trading prop account. It's been up for every single month for 22 years straight. So the strategies, they work longer term. On any given day, maybe you have some bad luck, you get hit. Maybe I'm going to have really bad luck one day and actually lose money in a month, but it's been 22 years without a losing month, so I'm hoping to keep that going. Now, my investment portfolio, it moves with the market. It has losing months. It has losing years if the stocks go down. It's moving with SPY for the most part, but the trading portfolio, I try to, trade at market neutral, and it makes the earnings more consistent. It's not up and down with the market. You're just kind of that slow, steady climb.
All right. And Spencer, could you a good way to get started this? I've been working with Rob Friesen, and he's been coming up with a top 10, and quite a few people have come over there and done it. And basically, it's probability, 10 stocks going up or down. This is from an open to close basis, and also it gives a hedging vehicle too to do with it. So we've been following it, and consistency. Like I said, it doesn't always give you the biggest returns. It's about consistency. So
That's if you're trading for a living. Don't you like a regular paycheck? I mean, this is why we treat to hedge when we treat hedging tactics at Bright Trading, because do you want your paycheck? Okay, the market was down 7%. I'm down. I did pretty good. I'm only down 5% this month. Well, you still lost 5% of the month, even if you're beating the market. That's great for a money manager, but that doesn't pay the bills. I'm trying to make money every single month because I have bills to pay. I don't have another job. I guess I do with the with pre-market prep, but besides that, I'm basically living on my trading profits. My entire net worth has, for the most part, been created just for my trading. So, I mean, it's nice to get a regular paycheck, and that's what the hedging tactics are all about. We teach that stuff. We do have those 3 educational videos at premarketprep.com that you can sign up for, and you can watch those, the different types of trading. But, I mean, if you hate, when you're always losing money when the market's going down, it doesn't have to be that way.
This market, yeah, definitely. All right, so what's saving the market today? Is it just sellers just tired of selling? And
Retail.
I mean,
retail.
you could point to Jerome Powell, the Fed minutes. I say Jerome Powell in jest, but it was actually the Fed minutes from yesterday. You could point to retail. There's a lot of things you could point to. I do want to start with Nvidia though, because this is indicative of this morning's market. Because last night this stock got down to $152. It was down $18 last night off their earnings report. And frankly, it was one of those reports, and we've seen a few of these now where the company was pretty upfront, like next quarter is going to be bad. The quarter after will probably also be bad. But looking down the line, we think these headwinds are temporary. They cited the lockdowns in China. They cited continued supply chain problems. They cited some softening demand for their products due to fewer people getting into crypto mining or fewer or less capex on the corporate side. Demand for their products from corporations. So they did lower the bar for themselves for the next 6 months or so, but they were still pretty bullish if you go out longer than that. Anyway, the stock was down, like I said, and I say was because it's really not down there anymore. Joel, tell us about it.
Well, we had fun with this one on the show last night, and you told me the Strata was $18, and
Yeah.
I'm like, holy mackerel! And just option traders win again. I mean, look at the thing got down $18, and what happened? I mean, was there a level there? I doubt it. I just probably just a lot of unwinding of hedges or covering of the straddle. So you're not going to see that. That's it. I mean, I'd be very surprised if you saw that pre-market low today. Looking on the dailies here, you're probably back within yesterday's range, right? 170, 171.11. That would be a little bit juicy if it got back up to yesterday's high. You have to use just moving forward now with the downward price action. I'm just going to give one number, 169.75. That was the close. If you're looking for a sustained move upward today, tomorrow, next week, or whatever, that's your level. Let's just call it 170. 160 was yesterday's low. I don't know if that's going to hold up in today's session.
I saw some people out there comparing Nvidia today to Cisco 22 years ago in the dot-com bubble. I get the comparison because Nvidia is seen as like the underlying, picks and shovels of
nuts and bolts of
nuts and bolts of the internet and of software and of hardware and of everything, of technology. I don't necessarily think it's that fair a comparison. I mean, on paper, like on the surface, it seems fair, but Nvidia is just such a different business, and I believe them. When Nvidia says that they think demand will come back strong, 6 months down the line, I believe them, and maybe I'll be wrong, but I still believe in this company here long term. Short term, not so much. Long term, yes.
Well, and to the point of Cisco, I mean, Cisco has still survived long term too. It just got to a valuation that was so ridiculous, traded 85 times earnings at the peak of the tech bubble there, and it just took 20 years to grow into that valuation, and it never got back to those prices. So, I mean, we were trading 60 times earnings at the peak on Nvidia, so it wasn't as extreme as Nvidia, but I think the comparison is actually a good comparison. I believe that Nvidia is still going to run a lot of, obviously automation, the gaming, all the stuff. I mean, chips are not going away. So the question is, what do you pay for that? It's still trading 30 times earnings. It's not cheap. It's not cheap. It's cheap relative to itself because it was 60 and now it's 30. But then you look and, and you just, take the, just blindly look at it and you say, okay, it's growing earnings at 43%. It's trading only 30 times earnings. GARP would say buy that. GARP, basically growth at a reasonable price, usually buys whenever the PE is less than the growth rate. So you kind of like that 1-to-1. If it's under 1-to-1, you buy it. So if it's growing at 43%, it's treating only PE at 30, you'd say it's a buy. The problem we have here is, are we at peak earnings on Nvidia, or at least peak growth? Not necessarily peak earnings, but peak growth, because there's so much, with so much demand for the crypto mining, like you were saying, the gaming, the pull forward because we were stuck in our homes for a year and a half. So there's an argument to be made that it was at peak growth, and maybe that growth rate long term isn't 43%. Maybe it's more like 23%, and then all of a sudden the stock would look expensive. So that's the question. Do I think Nvidia is a buy at a certain point? Absolutely. I don't know what that point is. I still have a lot of uncertainty in this market. So right now, I'm just kind of sitting. I was 50% cash and 42% cash. We know I put a little bit to work because we have come down enough where it's okay to put some money to work. But I'm not going all in on this market yet because, one, we still don't know what the next inflation data point is going to be. And two, there's just a hell of a lot of unknowns.
And also, I think you just have to talk about the market structure now. It's a whole different market structure with this one. Like, I'm not going to go out and say that it's never going to go back to 350, but you have a whole different, this way up, it's going to be a whole different way. You have people that are long to stock, the people that are stuck to stock, and different market environments. So I think there's going to be, well, definitely could be some intermediate rallies here. But if you're buying it here and you're thinking, I'm going to get back out at 340, 350, I don't know if you're ever going to see that level.
Oh, you may, but you could also have a situation where it's Cisco, and maybe it's going to take a decade to get back there. I think we need to stop thinking about where stocks were and start thinking about where they're going, because a lot of these stocks are down 97%. There is just the belief that every single stock comes back to its all-time high eventually, and that is a very flawed belief. There are individual companies that are going to zero. They are going to start showing up. You are going to start seeing some bankruptcies. Believe me, there's not going to be 200 EV companies. EV is going to be a huge part, but a lot of these companies aren't going to make it. You start, and you can already see the writing on the wall. I mean, the rides, $1.85 here now, not participating in any type of rally that we get. I mean, the thing was $32. You can start seeing that it has a high likelihood that this might be one. Maybe it turns it around. Nobody knows anything for certain, but I'm not betting on any stock. I will bet on 0 stocks go from 30 to $1, because when they go from $1.85 to like 85 cents, you just lost half your money. So you can't look at it and say, well, what can I lose $1.85? No, you can lose your entire investment. And dollar stocks, when they're under $5, there's a lot more higher probability that you are going to lose that entire investment. So think about what's held up. Well, the lithium stocks, those buys and pullbacks. Yeah, I think so, because we are going to have a move to EV. Higher gas price is going to drive that a little bit faster. Is Tesla going away? No. Tesla Q, forget about Tesla Q. Tesla's not going bankrupt. It never was going bankrupt. I put on the anti-bankruptcy trade back in 2018 by writing the $100 puts and getting $20 to get paid for that. Me and Jeremy Newsom did it at the same time. It was like, I don't think Tesla's going bankrupt. Is Tesla worth the current valuation? That's an argument. I mean, they got to do other businesses. They got to do other things. But Elon Musk is one smart cookie. But don't start thinking Tesla 1,200. Start thinking, because I don't think 1,200 is coming back next week. I don't think we're going to go into a V bottom. I think it's going to be a one of these where we were killed and we start to stabilize and maybe we start to climb out of it. But these targets, and Craig Johnson, we love Craig Johnson. I completely disagree with his theory that we're going to make new all-time highs this year. I do not believe that. I might be wrong, and I've went against Craig before and been wrong during the zombie apocalypse. Yeah. But I mean, I just don't see the path. I mean, I see a lot of problems out here. I don't think we're hitting all-time highs by the end of the year. But I might be wrong. It is possible. But it's not going to be certain stocks. If we do hit all-time highs, it's going to be, maybe some of these value stocks. Maybe the banks start coming back. Maybe some different stuff. Maybe it's going to be tech. Maybe Amazon and all of them can come back. Anything can happen.
I got distracted with the chat. I lost track of time. Let's bring on Mark Chaikin.
Let's bring him in. Let's see if he thinks we're going all the time.
Mark, what say you about all this?
About what? You guys just covered a lot of ground.
That's what I do. We're trying to get bang for the buck. Okay, so we've got multiple analysts think we're hitting all-time highs by the end of the year. Can we hit all-time highs by the end of the year? I mean, there's a path for it, sure, but what are your thoughts, Mark Chaikin?
You got to look at the historics, which tell you that in years, the second year of the decade and in the midterm election year, the market makes a low and then rallies 30 to 50%. That's what we've been saying since November of 2021. And so you will see a big rally off a low, but the question is, does the low come in July or in October? If it comes in October, there's virtually no way you're going to make a new high this year, but you will next year. So that's the roadmap I've been using. And I agree with you that these stocks aren't coming back. I think Nvidia at 350 is a pipe dream. Great company. I don't think it's Cisco. I think Tesla is something you got to be concerned about because of China and how important that is to their production. Elon Musk is a genius. I think he's taking on more than he knows with Twitter. I posted right after the deal was announced.
I think that was a mistake.
That would be his Twitter would be his Waterloo, which seems unlikely now. But Tesla's dropped from 1,000 to low 600s. So I think it's really important that you're in the right groups. And to me, the right groups, if you want to make money, is energy. Our energy picks have just
but still
unbelievable.
But still, though, now, I mean,
yes,
because it's on the one hand, it's hard to come in and catch a falling knife like Nvidia or any of these, but on the other hand, it's probably equally difficult to say, you want to buy these things now. ExxonMobil's already run so much, right? It's at a freaking
up 200%.
Is it an 8-year high for ExxonMobil?
Yeah, but look at how long energy underperformed in the bull market
for a decade.
So
yeah.
I think that for a whole series of reasons that energy prices are going to continue going higher. And I'm more interested in the speculative energy stocks. We talked about EQT on here. There's whole series, Oxy. I think Warren Buffett's onto something there. I don't know if he's going to want to own the whole company at some point, but he's certainly making a big commitment. And you've got to go with what the market's telling you. So on the one hand, you have energy where you can make really big returns. And then you have the defensive stocks like the beverage stocks. And, you've got to park money there if you want to stay exposed. But we talked about some levels last time. And in terms of the overall market, the one thing that I haven't seen, people are calling it capitulation. Let's just call it ultra high volume in the SPOOs. You haven't seen it yet. And on almost every serious bottom we've had in the last 25 years, you've seen a couple of very high volume days and on a weekly basis, and you haven't seen them yet. So
still waiting. Okay.
I think the market is in a position now where we can rally perhaps 10% from the 3,800 level. But first, you have to go through the previous peak and break the trend of lower highs and lower lows. So now you're talking about roughly 40.95 on the S&Ps. And we haven't done it yet. We're toying with 4,000 this morning, and maybe we get to 42.50 if we do break that pattern of lower highs and lower lows. But I do think we're going lower at some point. And right now, the way it's shaping up with the July Fed meeting being sort of what you would call data driven, because they've now said, okay, we see maybe inflation's peaking, not that they have any credibility in that area. But so we've got a sort of period between now and when the July earnings come out and the July Fed meeting where markets can do pretty much anything. But I think the rally potential is capped at 10% if we can get through 40.95.
So you like energy still, you like the staples. I take it you put utilities in that bucket as well, right? Same kind of thing, I'm assuming.
I am. If I was parking money, there's an ETF that I alluded to but didn't have the symbol last time. The symbol is BTAL. It's thin. It's the anti-beta ETF. And it's held up really well. Since in 2 weeks, it's basically up about 3 or 4%.
What's
So
the
that's
symbol, Mark?
BT as in British Telecom, AL.
What's in that? Like
Yeah,
they got
what-
anti-beta, so what is in it?
I'm looking. What is in this thing?
Spencer's looking it up too.
I'm looking it up.
Yeah, it's really interesting. It's thin. It's not widely known, but it's a great. I think if you think there's more tech wreck coming, it's a great place to park money.
All right, it's got
How much more pain? This is the question. I mean, we've had a tech wreck. The tech wreck has led us all the way down. How much more pain is there for tech? Is this going to be a continued thing that's just going to continue to punish tech? I mean, they've come even for the generals here, obviously lately with the Apples and the Amazons and the Facebooks and the Googles all getting hit too. How much more tech wreck do you expect, Mark?
Well, you've got 20 billion projected hedge fund redemptions at the end of June. And most of the hedge funds that are going to be under pressure in terms of redemptions were long all the same stocks that Cathie Woods were long, all the Tiger Cubs, Lone Pine and Tiger Global. They were all in the same stocks. There are 5 hedge funds, and some of that money is under lockup, but it's projected now that 20 billion is going to come out, and these guys are going to have to sell tech stocks because that's where they're exposed. So yeah, there can be more. I know it doesn't seem logical, but if you go back to 73.4, 10 times earnings.
so
Could
that
Nvidia sell at 10 times earnings? Sure.
that BTAL.
I don't think it will.
I'll buy it at 10 times earnings.
Me too.
I
buy
will
it at
back up the
15.
truck
I'll buy it
and
at
buy
15 times
Nvidia at
earnings.
10 times earnings. That would make it $50 stock. I will buy Nvidia. If it goes to 50 or 60, I will put a lot of my cash.
Yeah, but Joel, don't write this down. This is not a prediction.
No, I know.
You like to hold me to the numbers, but this
Oh,
is not a
Mark, I would
prediction.
never do that.
What are you seeing in there, Spencer?
Mark,
No, I hold on. I'm looking at the BTAL, and it's a bit of a complicated thing because it's one of these long short ETFs, so it goes
Right.
long and short within the fund, and it goes long low beta stocks, so stocks that are less volatile than the S&P that have a beta below 1, and it goes long the low beta stocks, it goes short the high beta stocks. So it's one of those weird things, and I'm pretty sure they short via swaps, so it doesn't really show up in like the holdings because there's weird stuff going on there. But this looks like one of these funds that does a lot of complicated engineering in there within the fund.
That's about right, and it's really a way to.
Oh man, it's so expensive, Mark. Holy moly, it's a 3% expense ratio. What?
That's okay. Imagine if you put your money in there in February.
3%? Are you insane?
Look at the money you would have saved or made if you if you invested in that in February.
All right, to each their own, man. That's
no. I don't rush out and buy it. But hey, look, investors are faced with a dilemma here.
Yeah.
I don't believe in bottom fishing, catching the javelin, whatever you want to call it. So for me, tech is off the table. Retail is a mixed bag. And what are you left with? You're left with energy. But by the way, Joel, you did have a big dip in energy. You had a 10% dip or more in some of these more speculative energy stocks just last week. And now they come back. EQT made a new all-time high yesterday after dropping all the way from 45 to 38. So there's plenty of opportunity in energy. And if you believe Jamie Dimon, the banking sector may have a run. So for me, it's a question of where do you put your money? Cash is not a friendly place to put your money with inflation at 8 to 10%. You could have gotten 3% on the 10-year. That's not happening right now. So I'm just looking for spots to park some money, waiting for the big bottom and the big rally. And that's what I think investors are faced with. It's a challenge.
Well, Mark, you were good because you were 3,800, and then when you're on 2 weeks ago, you kind of slipped it back to 3,600. Boom, it goes exactly to 30. Well, not exactly 3,800, and in rallies. But just going back to something that you said earlier in the conversation, and this is something time out. It's
almost 8:30, so we're gonna get a GDP revision here in like 10 seconds.
Wow, so I gotta go wide.
1.3.
As long anything above or below anything above or below negative 1.4%. That's basically like negative 1.4%. Because that was the first reading, right? So
1.3 is my.
And when Dennis means wide, that means that he has so many markets out there, and he's trading so many things that he makes his markets wide.
Doing
So he
the
doesn't
index
get,
arb. No index
so
arbing around numbers.
So he doesn't want to get picked off.
That's in page 1 of the market making book.
Yeah, go wide.
All right.
Go
So
wide.
okay, down 1.5%. So actually below the.
We're in a recession.
So
Ah!
they actually lowered it. So if you don't know about GDP, we get 3 readings of GDP, and then the final reading is like the quote unquote final number. And what they'll do is they'll give like the first reading out so this is all for Q1, right? This is for the January through March quarter, and they'll give the first reading out in April. Then they'll revise it in May. Then they'll revise it again in June. So we got our first reading in April. It was down 1.4%. Now they just revised it to down 1.5%. So okay, GDP did definitely fall in the first quarter. It was not a glitch in the matrix. It actually fell more than they thought a month ago. So anyway, that's why we just dropped there. Sorry to interrupt that whole thing.
That's all right.
yeah.
It's important to point out that the stock market typically bottoms halfway through a recession. So if you think it's only going to be 2 quarters, then maybe the bottom comes sooner. If you think it's 3 or 4 quarters, then the bottom comes typically 6 months. This is not a hard and fast rule, but the market does bottom before the recession's over. So that's something people should be aware of, because the headlines are all going to be about inflation and recession.
Yeah. All right. So I'm sorry, Joe. What was your question?
No, I just he made a comment about the volume, and what I'm a little, I don't want to use fearful or whatever. I mean, you had some big volume on those down days, right? In the May 18th, 19th, 20th, 23rd, or and so there was a lot of selling going on. I look at this rally, that we had on Monday, significantly lower volume in the S&Ps. I look at the volume on the rally that we had yesterday, significant lower than that. Do you just think that it's just kind of a little bit of sellers exhaustion here, and they're just, they're not willing to, step up and really buy anything here? There's just not as much major selling going on, because I would like to see the volume getting, like, just for the S&Ps. I would be more comfortable with this rally if it was, back 2 million, 2.3 million. The up two most recent updates we had are 1.74 and 1.74. Or am I just kind of poo-pooing the rally here? We're going into Memorial Day and the 4-day weekend and stuff. So what's your take on the volume, Mark?
I agree with you that there isn't a sense of panic and capitulation. We saw that in the earlier drops, but in my experience, every important bottom is accompanied with a capitulation day, and then either a blast out of there or a retest. The positive thing right here is you did make a double bottom in the SPY, and you're rallying off that 3,800 level. That's why I think you could get a 10% advance, but I think that's the max out of this. And
I see the one low. Where do you get the other one? I see the low on Thursday. We didn't go back down there, man.
It's there. No. Yeah. Well, I got to look at my S&P chart.
Are you looking longer term?
No, I'm looking. The first bottom was on May 12th, and then the second bottom was on May 19th or May 20th. So if you look on the chart, that's a classic W bottom pattern on a daily chart.
Okay.
What, can you show the chart, Joe?
Oh, yeah, sorry.
Like, just see what he's talking about.
Yeah, there it is. So you've got the lower low, which you didn't
I see the double bottom here.
Yeah.
The 2 lows in this area. Then you undercut it here.
No, that's the double bottom right there. That's that's the breaking the previous low, getting down to 3,800 on the SPX. So that's a classic W pattern. That's valid. And the one thing that's missing is breaking that pattern of lower highs and lower lows. So you got to trade above 4,100, basically.
It's also the Gilmore Morales undercut and rally trick, which obviously works as well. So you go down there, you hit some stops, and now you catch them. So it actually, when I look at that chart, it doesn't look bad. But I mean, the trend is still not your friend. Yeah,
and you're not getting the volume on the rally, which tells you that there's very little buyer enthusiasm out there.
Yeah, at least so far.
So, I think if you're an investor, or even, this is a tough market to trade, as I'm sure you guys have been talking about all week. So if you believe in these historical patterns, and I really do, the 23 out of the last 27 midterm election years, so that takes you back over 100 years, the market has either been in a bear market or just come out of one. It's an amazing pattern. The big problem for a lot of us is we thought maybe the bottom would be contained in the S&P at 17 or 18%. And I think that's going to be tough to pull off. But there's your buying opportunity. If you lose sight of that buying opportunity, when the rally comes, you're either going to be a skeptic or you're not going to participate. And that's sort of financial suicide. You've got to be there for that big 30 to 50% rally.
All right, Mark Chaikin, he's the
Mark.
longtime market veteran, founder
My
of
pleasure.
Chaikin Analytics, creator of the Chaikin Money Flow, the Chaikin Power Gauge, the Chaikin Oscillator. Mark, have a good one.
You too, guys.
Thanks,
Enjoy.
Mark.
Happy holiday.
Yeah,
Bye.
Yeah, 4-day weekend,
happy
3-day
Memorial Day. To you too. So someone in the chat asked, is VMware a buy? Well, yeah, VMware is a buy for Broadcom.
Sure.
And nobody else, right? So if you're thinking, oh, do I want to buy VMware today? Probably not. VMware, they confirmed the deal with Broadcom.
You got details on that?
Yes. It's a cash and stock deal. You ready for the numbers?
Yeah.
I got you, my man. All right.
Writing it down.
VMware shareholders, I'm reading straight from the pro here. VMware shareholders will elect to receive either $142.50 in cash, or they can get 0.2520 shares of Broadcom.
They have a choice to get $142.
Yeah, that's weird. I've never seen that before.
Well, we have seen
Show
that
me
before,
the
but I
money.
think it would trade higher than that if that was the case.
0.2520.
I wonder if there's like a limited amount, like you got to get it in there, and then. So what's the ratio? Give me the ratio again.
0.2520 shares of Broadcom. So take the price of AVGO.
0.2520.
So if it's 531 is the price of Broadcom times 0.2521, and I don't know what that is, right?
I can do it right now.
I'm not
times
some prodigy over here.
252. Yeah, you can't do that math in your head. Come on, Spencer.
No,
it's $133.
$133. All right.
Yeah.
What's VMware?
I'll take the 142.
Yeah, that's what I said.
Yeah, right. Me too.
That's simple. Don't have to be no mathematician to figure that one out, huh?
Yeah. Well, I don't know when they have to decide by. They're probably going to vote in a few months on it. Anyway, so that's the VMware. But there's more software to discuss here. A lot of software names today. So, let's go with the disaster stock of the day. Is Nutanix, NTNX, which is a stock we used to talk about every so often on the show. We haven't for a couple years now because it's not as hot as it used to be, but it was pretty hot back in the Anyway, the Nutanix had earnings overnight, and they weren't good. Their EPS, everything was down on a year-over-year basis, and their guidance was a disaster.
Wow.
They guided Q4 sales in the mid $300 million range versus an estimate in the mid $400 million range. Their sales guidance for the entire year was light. They missed badly on their earnings for last quarter. It was just a train wreck of a quarter for them. I have some other notes here on Nutanix. What else did they say? They blamed the same thing everyone else is blaming: supply chain delays, and it's hitting them hard, is what they said. So that's the same thing that everyone else is saying.
The March 2020 COVID low is $11.31. I believe that's the all-time low. So that's the line in the sand. It's hard to buy stocks going down 33%. They just don't bounce back. It's going to go to 14 to 16 maybe. Forget about 21. It's long gone. It's tough, man. I mean, these earning stocks, buying the dip worked so well in 2020, just doesn't work now. I'd lay off on this one. I'd be more interested in buying the dip in Snowflake than I would in NTNX.
Ooh.
And I can segue over to that if you want.
Yeah, Joel, you have thoughts on this chart here?
Well, yeah, just with this Nutanix, I mean, the speed of which it's going down has slowed down, right? So you have a patient buyer here. They're bringing stock in under 1350. So possibly you could see one of these days where it opens up 14 and a quarter, and then just kind of dribbles up. But if you're trying to get a bargain, I'd say I'd be out there at the pre-market low, but I think you got some company there. And then the bottom of yesterday's range, that's way up at 2066. Don't think you'll see a gap fill today, but good thing I didn't say that about Dick's yesterday, because it was
Wow, the Dick's
more than
turnaround, eh?
I know.
Yeah.
And
It's a retail turnaround.
what?
Is what it's
Okay.
been.
So all right. Let's. I mean, we let's do snow quickly, and then we'll go to.
All right, Snow quickly.
Yeah.
New all-time lows is tough to buy. Stocks
Yeah.
new all-time lows. I got a funny feeling though on this one. This is just going against everything I would write in my trading book, because I always say when stocks make new all-time lows, you gotta go. What's the pre-market low? 111, 112?
Yeah, it's
We're
much
starting to come off that. We're in this market
1035
environment there where there
then.
is some people, and I think Dick's turnaround was to that story where, there's just some people that, and I think they could be correct. The stuff's just so massively oversold that, okay, well, was this just a washout and this is done now? I mean, I don't think they're going to come for Nutanix because it just doesn't have the name that Snowflake. It doesn't have the retail love.
Influence, yeah.
Yeah, the retail love is there though still for the Snowflake. Part of me wants to buy the dip on it. I wouldn't short it. I'll say that.
I was just going to say that too.
I don't probably have the guts to buy it. My inkling, my little spiny senses feel like maybe this is one that could turn around and actually get these losses back. Like Nutanix, no chance. I feel like Snowflake could potentially turn it around, but we'll see.
I mean, it's so hard because I know that people that are long the stock and for even overnight. Like I look at this chart and this is a bullish chart to me. Going back from the
What? Stop. What chart?
Yes.
The top left corner you liking?
Yeah.
No, the bottom right one. The bottom right one.
This one right here.
The bottom right one. That looks like a bullish chart to me.
No, upper left.
Yeah, it's stabilized. We're not going down anymore.
It's up. I mean, it's up $7 from the pre-market low.
Yeah,
I wouldn't short that thing. Yeah, and I'll tell you, I'll give you a lot because if you want to get crazy, I mean, maybe you go from, let's say you get an early morning rally, you go from 110 to 120. I'm just hypothetical. If it came back down to 115, I would take a poke at it and lean on the pre-market low.
You got to lean on that pre-market low. What is the pre-market low again, Joel?
110.35. Yeah, I don't think
if
you see it.
Buying it and saying maybe we turn around, your risk here is the $6.50. You have
exactly.
To this thing makes a new low. You absolutely have to get out of it. It makes the new low from the pre-market and takes out. So it goes under 110. That's it. I would be out.
Give it to 109.
But if you want to just take a flyer and say, well, they are looking to buy the dip on certain sector and certain love names right now, they have been. Nvidia's kind of had the dip bot too. I mean, let's go to Nvidia, just back to it. I mean, we're significantly off the lows. Got down $18. We're only down $7. Nvidia has the outside chance to go green today. It would not surprise me. It's climbing.
Yeah,
it's been just destroyed. There's people that are going to look at it. I'm not saying long term. I'm just saying that right now it has the outside chance that this actually could go green. The market is shrugging it off. There is a little bit of the buy the dip mentality out here. I don't know. Maybe retail has started that. Maybe Powell's comments started that. But you can kind of feel it. There is a little bit of that inkling. So I'm not rah bearish right now.
All right.
No, and also if you look at Nvidia, the 3 out of the last 4 daily lows have been like right around 160. So if you could get it at 160, the 4-day low was 157.55. There you go. There's a possible setup, but the resistance is easier on this one to close. We're back over 4K. They bought the dip. They bought the dip once again.
These little dip buyers.
Yeah, those sneaky dip buyers. They want to have the, I've had a good week, Memorial Day, the market rally. We're due for, we had a 7-week losing streak. We can't keep going down. I kept saying to myself over the weekend, I'm like, no.
What is the streak? Where do we have to close to break that streak?
Oh, we're way above it.
You're way above it.
Yeah, because we closed, remember Friday? What a great Friday
I can't
afternoon.
remember Friday. I can't remember.
What a great Friday afternoon I took off. I can't believe I took that off.
Dennis,
oh my
to
gosh.
answer your question, in the SPY, it would be 389.
Oh, well, that's still doable, though, Joel. We could lose 100 points here in
I don't think we are.
3 days or
no,
2 days.
we're not. No.
In
Joel's saying it's not possible for us to lose 100 points.
Okay, I'm saying, I'll bet you. You want to make a lunch bet?
Oh boy.
No, I don't want to make a lunch bet. I'm kind of bull. I just got done saying I'm kind of bullish, and he's trying to give me. I just saying it could happen. It could happen. Anything can happen.
It definitely could happen. But now we're so far off the low. People
retail
are like,
turnaround.
Oh man, I listened.
It started.
All right.
The last sell-off started.
I listened to
in electrical.
PreMarket
Last
Prep. They told me
sell-off
not to
started
buy
with
anything.
retail. It's finishing with retail. We had Target and Walmart destroyed retail, and now we got Nordstrom and Macy's bringing it back.
Okay,
Yeah,
I gotta say this. I really didn't see this one coming here. So I kind of thought, okay, Target and Walmart said it's bad out there. If they say it's bad out there, I believe them. Turns out, some companies are actually doing a pretty good job of managing their inventory, because Macy's, not only did they beat last quarter, they beat on the EPS, they beat on their sales, but then they raised their guidance for the year. I can't believe it. I'm stunned. Macy's came out with a beat this morning. Dollar General out with a beat. Dollar Tree out with a beat. Build-A-Bear Workshop out with a beat.
Build-A-Bear?
Build-A-Bear?
Everybody's building bears.
I will show you.
Well, we should have known
Mitch.
Build-A-Bear. We're in a bear market.
We're building a bull, not a bear anymore.
Oh, look, we should have built a bear. We hit the bear. We officially hit a bear market last week at the S&P. Of course, they're gonna come in and buy. Everybody went and built bears.
I just want to show you.
Why didn't we think of that?
I just want to show you in my Benzinga Pro Movers tool, and I do have some filters on, so this isn't every stock in the world, but the number one gainer in my filters this morning,
Build-A-Bear.
Build-A-Bear Workshop.
Everybody's building bears.
Anyway, let's bring the charts up here. Let's start with
that one.
Macy's, but I don't care.
What do you want to do? Well, I had this Build-A-Bear. I will say for you bear traders out to $20. I'll give you this whole area. Just 20 up to this high here could be potential resistance. 20 to 20 and a quarter. And you got there in the pre-market. So if you're looking for more on the bear, boom, I got to get rid of these lines. They're no longer relevant. And then we'll take a look at Macy's, letter M. And how about that fat finger guy that sold it down to 15? He's never going to live that one down.
No, it almost tried to get down there for him, though. Got down to $16.95, but yeah, that fat finger. You sell stocks 30% below their market price. It's a pretty good recipe to lose money.
Oh, this is another fun one because you're gapping into a gap area. We're above 21. I don't know. You got above 22? I don't know. This one's tough. 22.28. If I had a target intraday, that's what I'd be looking for.
It's hard to chase stocks up 13%.
Yeah, I'm not buying
even though, yeah. And Kohl's, see, we should talk that from yesterday. Rumor is that there still might be a bidder. Bloomberg saying
they said
lower.
He said $62.
Yeah, they did. 41.
Yeah, I really believe in that.
I'm long it still. I'm a bag holder in Kohl's now.
Right.
I was in it for I'm with Karen Feidemann. We were in it for the bid, and we got shellacked on this thing. So I'm in from $46. It's not pretty. Ooh.
All right.
Another bag.
Well, why don't you pull up one of
some bags in that long-term portfolio now? I don't like it.
Pull up one of the dollar stores, DG or DLTR. It doesn't matter because they're both ripping this morning, and they both beat. Like I said.
Expectations, we said yesterday, were in the gutter for both of these things, and they got below those lower expectations. Fill in the gap, Joel. This is your kind of trade, DLTR.
Gap, gapping up into the gap.
Kyle Bass on TV. Hi,
yep,
Kyle.
I'll just give you a resistance here at 223.08. The way these things trade, you could easily get there. So I'm giving you that for the resistance. I'm not buying it up $22, even though it might be the right thing to do. Dollar Tree. You're above 145 now. Ooh, this is much.
We filled the gap.
This one did. Whoa, a lot of people getting them, but they get
their money back.
Yeah, everyone that got Target. Everyone that got Target is getting their money back.
They're all getting their money back. I'm telling you, man. If I was in it, I'd be like, "Thank you for giving me my money back. I'm out."
You know what? And you know who else kind of helped us here? Got our legs go. Foot Locker helped out a little bit,
Yeah,
right?
yeah, it did.
Yeah, it
That's
came
right.
in after
Best
the
Buy
report.
too.
Best
Yeah,
Buy. I don't know
Best
if you
Buy
guys.
wasn't a
but
disaster.
that didn't
The
rally
back
on
half
the
of
day of
retail
its
earnings were
earnings.
good enough.
Yeah.
They were good enough. And that's where we're at. Good enough is good enough.
All right, let's go to a couple of these big Chinese stocks this morning that both reported. Alibaba and Baidu. Baba's trading up. Baidu's trading up.
Good enough.
I don't actually
It's a
know.
good enough
I'll be
day.
honest. I don't even know what. Let's see. Alibaba EPS beat. Sales beat. Baidu EPS beat. Big wow, huge beat, and then revenue also
Don't
beat.
they always beat?
Well, I mean,
We love the accounting. There's no gap accounting there. I think they
no
always
gap,
just-
no gap
There's-
counting.
Dennis, there's
Like,
no
are they going to beat?
accounting.
Of course
There's
they're
no
going to beat.
accounting. There's
How'd they
no
ever miss?
accounting. You
All
don't
right.
have accounting. There's
gonna
no
look.
accounting.
Here, I'm looking. at the
How
screen right
often
now.
How often does Baidu miss?
Okay, here I'll show you. So I just put Baba and Baidu together on the same
They
calendar.
don't ever
here.
miss.
No, they you can see some red sprinkled in there.
Did they miss?
Yeah, a couple of times. Is this?
They got to throw in a miss every
Wait,
once in a
wait,
while.
wait, hold on. Hold on. Here, this is chronological order. There's some red on there a little bit here and
A
there.
little bit of red.
Yeah, just a little bit.
They pretty much beat a lot.
Yeah.
If you believe the numbers. Obviously, we're trying. We're supposed to be opening up the books. That was the whole thing, so we can actually audit these results.
Yeah, I don't know.
As opposed to just like, we'll just make it up as we go along. Are we going to beat? Of course we're going to beat. Put those
90
numbers out
bucks.
there.
Oh, wait, we're a long ways from 90, right? I mean, there's, I mean, that would be, I don't think this thing's out of the woods until it takes out the pair of highs at 90. Do I have anything else for you in this area? Yeah, you haven't even hit 87.42. That's your 3-day high. Let's keep an eye on that. Now, here's another concerning thing about what's going on with Apple today.
Apple's been in the gutter, man. It's not participating at all.
I don't know.
And Apple, and yesterday was down. Today is down again. Apple's concerning.
What's going on? Is there news? News me. No news
on Apple? No.
It's down to.
It's
He's
down
right.
$2?
It's down 2%. It is like somebody downgraded or something today. I can go hunting.
Really?
Someone downgrade. Okay.
Well, let me go hunting.
Wait. I'm sorry. It was. We have so many headlines that I missed it. So Bloomberg reported. This is overnight. That's why I missed it. That the Apple plans to keep their iPhone production for this year flat year over year due to COVID lockdowns. So you typically you'll increase production on a year over year basis, and they're not going to do that because of COVID again. So
Apple's not participating in the rally at all, Joel, yet.
No.
So not that we've had much of a rally.
Yeah.
But it is concerning. I'm long my Apple. We know I sold a little piece of it. I sold 25% of it at 175, I think, and which is almost the high of that move. That was back in March. Wish I would have sold the whole thing, but I didn't want to pay the tax. And now I'm like, why didn't I sell the whole thing? 138. I don't know. I think Apple's eventually could retest the lows. This is one I would stay away from. There's a lot, and I'm in it. I'm in it because I don't want to pay the tax. But I think if you're looking at buying the dip in Apple here and thinking it's got to go higher, it's still not cheap relative to itself. It had a ridiculous run. I think Apple eventually has a date with 120 again. Just my opinion.
I guess my
talking completely against my book. I'm long it.
Does anybody have it like when certain people call, it goes right to voicemail? My phone is not on Do Not Disturb.
Yeah.
I guarantee that.
Oh, I get that all the time.
Really?
People call me and my phone doesn't even ring. It just goes straight to voice. It's on. It like automatically silences the phone call.
And then, and I tell Siri, I'm like, Siri, turn off Do Not Disturb, and she goes, "It's off, you dummy." So I don't know.
She says she calls you a dummy.
She actually says
that's not very nice.
Crazy. Anyway, let's do some ticker time here. We got a few minutes left. Rob Hood in the chat asked about like Snapchat, Pinterest, and Carvana. I don't know which of those we want to watch. Snapchat's probably. I mean,
he's looking at some quality.
Snapchat got the Dan Nathan rally yesterday. Don't kid yourself. Fast Money Dan Nathan is actually quite influential, and he said he really talked it up yesterday on 2 days ago on Fast Money. Said he bought the stock and he thought the stock could eventually get back to all-time highs.
I don't know what he sees.
I don't know what he sees either, but he bought it and it literally ripped $1 yesterday. And I believe Dan Nathan kickstarted that because it started taking off when he said that. They follow a lot of people. Dan Nathan, risk reversal. He's got some influence.
We had
So
him on.
he
Did
gave
we
it a
ever
vote of
have him on?
confidence. I think that stopped it from going down.
Do we
Dan
ever have
Nathan?
him?
I think we had him.
Probably
Are we allowed?
years
Is he-
ago.
CNBC
Yeah.
blocks us from certain people. Are we allowed to have Dan Nathan?
He's in our master doc, but
I actually, he's so bearish, and but he speaks his mind. He kind of reminds me of myself. He's like, wow, he just says what his opinion is, and he doesn't care if they're going to beat him up on Twitter for it. I like Dan Nathan. We like you, Dan. Come on their show.
We know you love getting beat up on Twitter.
All right, well, Dan does too.
You got a great level here, 1457. I mean, that was yet two double top. You get into that, there is some room for the upside. I don't think you're going to need to get your offer out here to fill the gap anytime soon at 2171. I get out there at 2170, but it's just going to be, if you take out the 1457, it's just going to it's going to trudge up. And the reason it's going to trudge up is because you just had these, and I'll use the term whales, that just came in. 286 million shares traded on the earnings day. And they came in, they said, hey, I'm buying this at 12.15, 12.50, 13. I'll buy more if it goes down. And then if it gets to 14.57, I'm out. I don't care. They're just intermediate term traders. So it ain't going to rip up because people are actually long at much lower prices and they're just trying to scalp out of the position.
What was the other two?
What was it?
Well,
Carvana.
Pinterest and Carvana. Carvana, frankly, I don't know much about this business. All I know is that they overpay for cars, and nobody wanted. They did a bond sale. They did a bond sale, and nobody wanted their bonds. So nobody wanted their debt. I don't know.
And they're burning cash.
What that says about your business when nobody wants to buy your debt.
If you're burning cash and you are having trouble, selling bonds, that's not a good recipe. Massively oversold. The stock was $376 in August. It is now $30. That's a 90% fall, more than 90%. From my experience, stocks that go down 90% often go down 100%. So I'm laying off.
Let's see here. I mean, you got a couple lows in the same area if you want to lean on that.
Yeah, I can lean on anything. $26.
Yeah. I mean, it's $5 off that low. I would just look for continuation through the daily highs. Right now, 3160 is a high for yesterday, and then theoretically it opens up to 33. I'll call it 33.45. That splits the 3 and 4 day highs. Really can't give you much more than that.
Let's look at a stock in an uptrend. I didn't.
Oh, is there any?
Somebody asked about AT&T. And that's a nice looking chart.
And Dennis is going to tell me it's going out of business.
Nice looking chart.
I've never said AT&T is going out of business. I said their businesses are under attack, and I'm still not buying it.
Yeah.
Been right about this and kind of wrong all at the same time, if that's possible.
Yeah.
The
dividend is still not a bad dividend. Just kind of been nibbling at it. This is a big move for it. There's probably coming into expiration. I don't know. Dennis, is there a pile of paper at 2150? Something like that. Yeah. That's a big move. I mean, that's a big move for it since Thursday. It was actually green last Thursday. So really nothing on the monthlies.
You still got this one?
Yeah. Yep. I've been buying more.
You bagging this or you up in this? Because you got the WBD spinoff.
Yeah, I got the WBD.
Which has been a dog.
Which has been a dog.
Did you hold that?
You know what I said? I haven't been buying. I have been buying this just intermittently. I don't know if I'm up on it or not, Dennis. I don't look. It's too painful to look.
Nobody looks at a long-term portfolio in a bear market.
You just look on up days, Dennis.
I try looking on up days and it still sucks. My long-term portfolio still hit hard.
I would just look at just for T 21.5, see if there's some big paper there, and then you open up to 22. But this is the best green candle, monthly candle you've seen in a long time, and it's just like there's nothing else to buy out there, right? If you don't, the people are like utilities. I mean, it just didn't find any sector to be favored in. It just has so much bad news. So
Yeah.
And I like HBO. That winning time was that
show.
was really good. I
All right.
really liked that.
Speaking of TV, Dennis, good luck tonight. The
Oh, man.
Oilers have a
Oilers.
They
chance.
can close it out, but it's going to be tough. They're going to be well. You look last night. What happened? Colorado's up 3-0 in the game and 3-1 going into the third, and they lose. I mean, to close them out. So
They have
it's
a
tough to
chance.
close teams out. The desperation. It's hard for a team that's up 3-1 to match the desperation of the team that's down 3-1. That's your little psychology behind your hockey games there. Colorado found that last night with St. Louis. I hope Edmonton cannot take Calgary too lightly. I hope they can match their desperation. I hope that they can knock them out tonight.
It's hard to win. Big if true. Good luck on the Oilers trying to get to their first conference.
Is that the Battle of Saskatchewan or something?
Alberta?
That's a
This says
big
the
one.
half Canadian.
All right,
He knows
all
his
right.
Yeah.
provinces.
Woohoo!
All
man.
right. I'm
Igloos.
gonna say goodbye to Joel. Igloos. What's gonna say goodbye to Joel? Goodbye to Dennis.
There's a lot of
Bring
igloos
on
up there.
Peter Tuckman, the Einstein of Wall Street. Oh wait, I just lost him. He was here a moment ago, I swear. And then he in fairness to Peter, I did see he was in his car. I hope he wasn't driving. We've done this before with Peter, where he joined us from his car on the way to work. And there he's back now. Okay, I hope this works. Peter, what's up, man? Uh-oh.
You know what, Spencer? I can barely hear you. You're like talking. It's so funny. You're talking like this. Must be a shitty connection. Talk to me. Let's see if we can get it done.
Let's see if we can get it done. It's been a couple weeks since we were able to catch up. Let me just ask you, what do you make of the price action here?
You know what? I can't really hear what you're saying, but I figure I know what you're asking me, and it's sort of it's okay. Can you hear me?
Yes.
Give me a thumbs up if you can hear me. All right, then I'll just chatter. You know I can do that pretty easily. Anyway, guys, look, I'm kind of finding that the action that we've had over the last couple of days, I feel, is a little constructive, right? A lot of the information is already out on the table, right? We know about the interest rates. We know about the taper. We know all the different pieces of the puzzle that are out there. And if the market really wanted to head on a leg down further, I think it would have done that by now. I'm just trying to look at from the cup half full, not half empty type of situation. We've seen some big leg down. I know it. We've seen a market that's stocks are down 30, 40, 50, 60%. And I get that. And I feel everybody's pain. I understand that. But what I'm just kind of feeling is we've also had those bear market bounces. We've also had those buy the dip bounces, but over the last couple of days, what are the signs of the bottom? I love it. I love it. Well, to be perfectly honest, I think what we're seeing now, you're the greatest, man. I think what we're seeing now, which is a constructive, sort of a little bit sell with a little bit of a rebounding of a buy, could mean this. Look, it would be irresponsible for me to know where the bottom is. Sometimes its bottom is when you stop digging, right? So it's a really hard place to put it with so many moving parts in this market. But when you're the last couple of days action, right, where you're actually seeing a bit of a rebound at the end of the day, feels constructive to me, right? You know what I'm saying? On these down days, for a while there, we'd see these big rebounds, and then they would smash them at the end of the day. Now what we're seeing is sort of a smash in the morning and a rebound in the afternoon. And I kind of think that could be, it feels constructive for the market. It feels that the market's trying to get its footing in and trying to find a place where it can start rebuilding this market, because clearly it is broken. Look, there are still a couple of unknowns on the table. The war is not the focus at the moment, it seems, is amazingly enough. It's amazing how markets and the economies of the world can digest so many different things and still move on. But look, I don't know where the bottom is, Spence. I wish I could tell you, because that would just be, even my meme emoji that I'm the bullish indicator is no longer working, because I've been all over the place and the market keeps going down. But I think the only thing go ahead.
All right, let's see if it works.
Are you sleeping in the car? Because no, you know what? I don't really care. I love you, man. I don't care about the losses. From my own perspective, I just keep getting up every morning and going to work and trying to, make a little money every day. As we know, technical analysis is the best defense in a market like this. But let me be clear. The action over the last couple of days feels constructive to me. Okay. If they really wanted to pound them, they could be pounding them, and they're not. What's your next question?
No, that's all I got. Peter Tuckman, Einstein of Wall Street. Thanks a lot, man. Go get to work and quit driving and talking at the same time. All right. That was a lot of fun. I don't think you can hear me at all, by the way, but that's okay. That's the way it goes sometimes. All right, we are done. That's a wrap for our show today. Yes, thank you, Gregor. Please don't trade and drive. Make that the last piece of advice for today. So as we wrap up, please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. Thanks to our guests, Peter Tuckman and Mark Chaikin. Hey, have you checked out benzinga.com/premarket? Check it out. Also, check out Benzinga Pro, pro.benzinga.com. Discount link in the description gets you 25% off. We are also doing a Memorial Day sale. Go to pro.benzinga.com to learn more about that. We are only at 354 likes, I am told. That is unacceptable. Let's see if we can get to like 500 likes in the next 10 seconds. That's a wrap on the show, though, because I'm going to end the stream, send you over to live training with Mitch, Zunaid, and Ryan Faluna, who is back in the saddle. He's been under the weather for a few days, and then he was out of town before that, but he's finally back, we think, we hope. I'm looking forward to seeing him on stream, so I'm going to end us now, send you over there. I'll see you guys later on Benzinga Live. Smash that like. Good luck at the Open, and don't eat yellow snow, I guess.